All right, hello everyone and welcome to today's webinar. This is Jared Meyer joining you today from the NinjaTrader ecosystem. Before we kick off today's event, I would like to do a quick test of picture and sound. If everyone just please type a Y in the room if you can clearly hear my voice and see the slides up on the screen. All right, I'm getting quite a few Ys, so thank you everyone for doing that. And I want to welcome everyone again to the room. We have a very special event. Rob Graham of Bigfoot Automated Trading is ready to give you a fantastic presentation. A couple things before we start. NinjaTrader ecosystem is pleased to sponsor weekly partner events as a value-added service for our clients. These events are intended to provide increased exposure to the various trading styles and methods taught by our partners. So if you find value in these events, we hope that you will attend them on a regular basis. I want to ask everyone a quick poll question before we get started. If you would just do me a favor and select 1, 2, 3, or 4, that'll tell us what kind of people we have in the room with us today. All right, and while you guys fill that out, I do want to remind everyone that it is important to understand that there are substantial risks in trading Forex and commodity futures contracts. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstance and financial resources. It is possible to lose all of the funds deposited with your broker, and you could even incur losses beyond these amounts. Please inquire at brokeragesupport@ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please do remember that these ecosystem webinars are not a solicitation or recommendation, but simply educational in nature. All right, so looks like almost everyone's filled out the poll, so I'm going to just move along to the results. We've got probably about a third of our attendees who are using a free license key. Welcome to the room today. We have nearly half of our attendees today are using a free, a lifetime license key. We're glad to see you in here, and we're happy that you just go ahead and make that purchase. And we've got about 10% of folks are leasing a live key, and we do have some folks that are brand new to using NinjaTrader, so or are not even using it. So if you're one of those in attendance who has not yet used NinjaTrader, I do want to invite you to download NinjaTrader absolutely free and get started with simulated trading, advanced charting, market analytics, and strategy development. This free version of NinjaTrader you can download from the following link. Has no expiration dates. You can use it just as long as you like. And for those of you that are maybe using a free version or leasing, and maybe you're considering taking the next step and purchasing a lifetime license or leasing, I do want to encourage you to investigate the following link here, which goes over all of the options for purchasing and leasing your NinjaTrader platform there. So thanks everyone for the poll. I'm going to stop that here. Just as a heads up to everyone, this is being recorded, and if you registered for the event or just put in your email address when you did attend, we will be sending out a copy either tomorrow or the next day, so you'll get a copy of that real quick. And again, we are very excited for this unique event in which Rob Graham introduces the Bigfoot Automated Trading strategy parameters on 2 chart sizes and how they work. I want to thank everyone here for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader ecosystem webinar room, Rob Graham. Please take it away, Rob.
Thank you very much, Jared. All right, how's my audio? Can everybody hear me? All right, great. Thank you very much for letting me know. Okay, so we're going to be talking about the Bigfoot Automated Trading System. So first off, we'll go over our required disclaimer, and that's that you only want to trade with money that you can risk, and past performance is not indicative of future results. I think everybody who's a trader understands that. So how does Bigfoot work? The Bigfoot strategy uses the EminiSniper indicator package. That's my normal indicator package. And all of those indicators, or I'm pretty sure all of them, are included in the subscription. We use 1 and 2 tick EminiSniper trend bars. That's a kind of candle that it uses, tries to eliminate as much noise as we can. And those are also included with the strategy. So if you then want to use those for your manual trading in addition, you can, and it'll really clean up quite a few signals. It works well with the regular EminiSniper indicators and whatever else you like to trade. Bigfoot identifies market trend and then trades in that direction just by looking for retraces. You don't want to get in on a short at the bottom. You want it to retrace up, trigger some more interested sellers. And then we look to net out a couple of winners per day before the markets tighten up. So what we see daily is that there's going to be some good movement, and then the markets are totally going to go to sleep. And so we'll watch, we've got some slides where we discuss that, but that's kind of what you're going to see every day. What can't Bigfoot do? Bigfoot can't make an indecisive market move. We wish it could. Just because you turn on the strategy doesn't mean that you're going to get dynamic movement, and sometimes you're just sitting in chop, and that can trigger some trades. And so what we try to hope is that we're going to get follow through on these moves, but we'll see some of these moves where you're looking for 10 ticks and it goes 9 ticks. And you can certainly handle that within the strategy by going to break even, trailing, whatever you like to do. But definitely there's going to be some trades that almost hit target and then don't quite, just because there's just not enough follow through to quite do that. And then there's trades that will go 60 ticks in the direction of your trade. Bigfoot can't get rid of chop. So when markets go sideways, you can get stopped out. Sometimes we'll see that we'll get some sideways activity. You'll catch one winner, one loser, hopefully, and just kind of get through that chop until the market decides on direction, takes a few good trades in there, and then that's going to run out as well. And then as far as timing every trade perfectly, sometimes Bigfoot gets in, hits that 10 or 8 tick target, whichever trade chart size you're looking at. It'll hit that target just perfectly, no problem. Sometimes a trade will start, Bigfoot will trigger, the trade will back up, and if you have a tight stop, it can knock you out of the trade. So you can either play with a bigger stop if that's your preference, or just understand that that's going to be the nature of trading. It's something that's very common. And but hopefully Bigfoot can still put up some ticks even if there's the occasional trade that'll knock you out before it gets started. When should I avoid trading? So this is off the website. If you go to bigfootautomatedtrading.com, you can go through that facts page. This is from that. So market opens, news events, consolidated conditions, they're all situations you should consider avoiding. Market open, so that's like your pit open. So instead of opening right at 9 Eastern Standard Time, I let Bigfoot run from 9:05. Some people don't like that little time between the pit open and the U.S. market open, so if you want to delay it, you certainly can do that as well. Market openings and news events, you know those in advance, so that's great. You can plan accordingly. The crude oil inventory report is definitely our #1 rule. As far as trading through that can be very hectic to say the least, and I've seen 33 tick stops and 33 tick winners. It just depends, and it's a tricky situation, so we'll definitely be concentrating on that later on. Consolidated markets, when the movement is very light and there's no trend, that can occur at any point. So unfortunately, they'll just tighten up on you, and those aren't something that you can check your news calendar and see when that's going to happen. That's just going to happen intermittently throughout the day. So during lunchtime, that kind of thing. FOMC day, a lot of people stay out of trading in general on FOMC day. Even though that doesn't necessarily affect the crude oil market, FOMC day just can put a real damper on all the market movement up until that report hits at 2 p.m. and then it's off to the races, and they do some real wild moves. And then indecisive and trendless markets can have restricted movements and can make hitting those targets that we talked about a little bit trickier. All right, so our standard big chart. So this is when we're in the room and I drag over my big chart, this is what we talk about. So today, this is today's chart. So we were hanging around, this is called our reversal bands. We have our center channel, reversal bands on the long side and the short side. So we were saying, well, we know that long is the correct direction, even if the market doesn't feel like heading in that direction yet. What you don't want to do is be one of these short traders. So what we have here, I know it's probably hard to see, but there's a faint line connecting this swing low at midnight and then this area here. And it's only like 2 ticks past the midnight swing low. But some people trade breakout, and breakout is a really nasty thing to trade unless you know where you are on the chart. So you want to be, if you've tried breakout trading and it's just hammered you, you at least need to know what the market does before you tried that kind of thing out. So we wouldn't have the diver scout signal or divergent signal if there wasn't people that did breakout trades. And so we'll see a lot of times diver scout signals will be at the reversal bands, and that's just the market punishing people because we know back in the direction of our center channel is where they're trying to get to. So this is about a 100 tick move. This is actually beyond 100 ticks, but we're looking for price to return to the bottom of our center channel. So when price is down here, we're talking about where they're going to get to at some point during the day before they even get started. So it's nice to know at least how far the market's going to go and what its limitation is. Now when they get there, that doesn't mean drop short. Our targeter tells us when it's the end of the move over here. So it's not exactly the top, but it's within a candle to the top. And it's a very, very big move and one that you certainly want to watch for because that's basically the big move of the day. You may get 2 moves from a reversal band on your big chart back to the center channel, but 3, it's almost a record. You don't really see that kind of movement, very rarely. So that's our big chart. So what we're looking at is bid ask. That's this panel down here. We've got our targeter, we've got our channel bands, we got diver scout. So on our smaller charts, so we've got these pasted, 8 of them in the room because we follow a whole bunch of different markets. So we're looking at a couple of currencies, a couple of commodities, a bunch of indices, and so you'll have charts that look like this in the room. And so what we want to do is we can identify the same reversal band. It's obviously not the same distance as on our big chart, but it's the same reversal band, the same moves back to our center channel, divergence, all that kind of fun stuff. And then up here, we're at the reversal band again. So we don't want to look for longs up here. They're going to want to eventually break down into this area here. So that's what we look at. And so these are just called sniper signals. And they've got trail dots. Sammy, I'm sorry, Sammy wants to enlarge his screen. I'm not sure how to make it bigger on your end. Diver Scout tells us when we're going to get these kind of divergent moves, and so there's a few of them on the chart that do nicely. Now, as far as what the sniper signal is doing, well, when we look at Bigfoot, that's going to be this kind of signal. So it's looking for longs. 1 of them didn't work out. 3 of them did. It was able to put up, we're looking to net out a couple of winners. So on this size chart, we're looking at an 8-tick target. And you can set this up for a runner, but in a runner situation, because our reversal candle, this guy, is going to be about 10 ticks in length, that means that if you are looking for 8 ticks, you need at least an 18-tick run. And an 18-tick run is pretty significant on this size chart. So when you see these green stripings, that's where it's going to be looking for, in this case, longs. It would be red if it was looking for shorts. Willie C is telling you to open the square on top of the right screen, and it will increase your view. Okay, Sammy's all right. Thank you, Willie. All right, so anyway, so these are what it's looking for, is these longs. And this would have been a nice long winner also. But when you see that yellow box, that means that we've timed it out for the day. And I think in this situation, it was trading until like 3:30 or something like that. So it missed another potential winner, but no big deal. It was able to put up some ticks, and that's all we're looking for. We're not expecting it to run overnight and you wake up and it's put up 300 ticks in 24 hours or something like that. The markets just don't allow it to do that. It's basically going to have some dynamic movement. It's going to tighten up. It's going to have dynamic movement again. So we're pretty happy if we can eke out at least a couple of winners a day on it. I've got some people that ask me, how can I retire on 20 ticks a day? Well, Bigfoot's not really meant for you to retire. Like you pay somebody $300 and then you get to retire. It's not going to be able to do that, but it's going to be able to put up ticks in the right situations, and sometimes it's not going to be able to. But generally speaking, it's able to put up 2, 4, like net winners a day. I've seen 7 winners a day. Not in August. I've seen it in probably June and July, but I haven't seen it in August. But generally, we've seen some really big numbers in the past, and they just kind of dry up during the summer. So we're going to take what we can get. Sorry, Javier, I'll try to put my mic closer to my mouth. Overnight hours. So overnight hours, this is all yellow because it's not taking any trades. When you see, I kind of cut this off, but this is another one of our red lines. When you see this short, you only need 8 candles, which would be probably about right here. This short, the next short, the next short. If you see that it's putting up that kind of movement overnight, you know, that would be enormous. It'd be 5 winners in a row when you're not even watching it. So you have to expect that the market is going to tighten up when you start trading. It's just not going to stay dynamic forever. And this is all the dynamic movement that you would hope for during the day. And it's taking place overnight. So when we have that kind of situation, we'll see what it did. The next trade that it looked for after the pit open was a winner. And then the market kind of went sideways. This is actually yesterday. And it picked up 3 losers in a row. And then it followed up with 3 winners in a row. But unfortunately, you could kind of see it coming just because of the overnight movement. And now my voice is doubling. It's not doubling in my ear. So Umar, you may be in the room twice. I'm not sure. Sometimes that'll happen if you're in the room a second time. So anyhow, as far as this kind of movement, this is our 1 tick chart. It's our smaller chart looking for 8 ticks. It was able to net out, you know, $100 before commissions. And that's why, like I said, this is why many traders avoid August. This is, you're going to basically get chopped every day at some point during the summer and beyond. Now the 2 tick, so this is our bigger chart. So for every candle, it's going to move two ticks in your direction. The 1 tick moves 1 tick in your direction. So this is the same chop area here. So you can see 2 tick didn't even trigger a trade. That's not what it looks for. So it was able to stay out of it. So it was able to hit the winner, looks like, I guess, right at the U.S. market open. Another nice shorty at 1020 or so, 1120, and then another one at the end of the day. So it was able to put up 40 ticks, and that's yesterday, which is great, especially on a Monday. Mondays are not known to be that good. And then again, you know, we can see the yellow box where it stopped trading on the day. All right, so this is last Friday. So this is the prior day. We had the weekend. And this is also on the 2 tick. Now, this is a trendless day. And for anybody new, you define trend by having either higher highs and higher lows or lower lows, lower highs. And if you're not having that, so we have a swing high here. And I guess way over here, they might have taken it out by a tick and then punished all the breakout traders. Here we have a swing low, and it doesn't even look like they got to it. So Bigfoot was able to handle the short when it was appropriate, get into a long. Now that's a choppy long. You see those doji candles, and one moment. You see those doji candles and the sideways activity, and it was barely able to hit a winner. Then it moved short, and it was lucky to get the 10 ticks on that move. Here, it got knocked out of a trade that would have been eventually a decent move. And then we started putting together a little bit of this trend. You can see the same thing. You get a winner after that yellow box, meaning that it stopped trading on the day. So it could have maybe put in one more. But on a day like this, there's nothing dynamic or attractive about the trend that's going on that chart. Do you have audio now? All right. Does everybody else have audio? Javier can't hear. Okay. All right. So some people get doubled. See, some people get an echo. I was getting. All right. Thank you, Michael. Okay, it's very hit or miss. So some people get soft audio, some people get double audio, and some people are fine. So my apologies for that. All right, so, okay, awesome, Richard. That is good to hear. Okay, so this chart, this is important. Will every day be easy? No, it won't be, unfortunately. So let's kind of go through these trades. What size chart is this? I have to see. Okay, so this is a 2-tick chart. That means we're going for 10 ticks with a 10-tick stop, right? So the first trade goes, it looks like it goes exactly 10 ticks and stops out. The next trade goes 9 ticks and stops out. That's just bad luck. You can change everything and say, well, then I can hit 8 ticks, 8 ticks is now the proper target. Well, that's okay. You can certainly do that. However, if I just leave it at 10, I know that typically it's going to be able to put up some ticks. And it's just a challenging day. It barely got into positive territory by the end of the day. And, the movement was just not great for what it's looking for. And those couple of longs that came within a tickier target, you can definitely tighten up to break even and not get beat up on those kinds of trades like that. And it will adjust your stop. You won't take a full stop out because it does have an exit criteria as well. So if it goes in your direction, generally it's going to be a smaller than full stop for you. Okay, this is how you set up your target, stop, trail, and break even. So it actually has a 2 separate, so you can set this up for 3 contracts as well. It's got 2 separate targets. So if a lot of times shorts can run further than longs can. Longs are a little bit more of a challenge. As we just saw in the prior chart, it was difficult to hit the full 10 on the first 2 trades that it took. So as far as what it's able to do, we've got the stop here and 2 different targets for your longs and your shorts. And then you can turn on your break evens and your trail stops. So whatever your favorite setup for that is, you can definitely do that. And I do have people that just try to do runners with it. And all you need to do for runners is just zero out your profit target. So there is no profit target. And then there's an exit criteria that you can adjust. And so it'll try to make the most out of all those big moves that we see. But again, sometimes you're going to be happy taking 8 or 10 ticks rather than, hoping that it's going to run 40 ticks in your favor. A big thing that we need to discuss is crude oil inventories. So if we're looking at your average day that's not crude oil inventories, this small box, that's going to be from 10:20 to 10:31 Eastern Standard Time. And that means that if it was a crude oil inventory day, we're going to stop trading 10 minutes before the inventory report until 1 minute after. And the 10 minutes really doesn't mean very much. It just means we expect the market's probably not going to move very much just prior to a report. Like we talked about prior to a news event, you're going to get some consolidation. The market's not ready to make a move. It wants to know what the report's going to do. So, some people don't want to trade at all in the morning prior to the inventory report and then turn on after, and that's another option for you. So in this case, I guess it had hit 1 winner. And then this is not an inventory report day. That's why that box is small. And then it, put up the net 2 winners, and that's fine. This one, again, we talked about that the market can back up on you with a tight stop. If your stop's down here at the swing low, yeah, no problem. You could hit as much of this big trade as you want. But if you just want to take it as it is with a 50% win-loss kind of scenario, it was able to net out the 2 ticks. So this is what crude oil inventories looks like, and we don't see any of the 10 minutes that it's off. This is 10:30, and it's still 10:30, and it's 10:30, and this means that the market is flying. And if you were to ride this out, you will hit some winners in this, but it could be a complete mess, and you could just get churned in this kind of stuff. Then there's still actually a little bit of churn 1 minute after, and then it settles down and hits gets up to 30 ticks. on the way up, but you don't want to suffer through that. And it can blow stops, it can blow your targets. It's not fun. And then there's other ones, other days it's going to be, there's going to be perfect trades in that time frame. So this is one of those. We caught a couple of longs, and and so that could be it for the day. You could turn it off, potentially if that's what you're looking for, and then just one really nice short during the inventories. And again, that box is really big. I think this is still a 1 tick chart. And so it was able to put up 4 winners. That's great. On a crude oil inventory day, we don't always expect the best things, because usually prior to the report it's choppy, and if you've got a 2 loss stop as your max on the day, it could just as easily be hit prior to the report if nothing's moving. And so inventory report day in general is kind of a nail biter. And so anyway, that was able to hit. And another thing that I wanted to mention is this is actually a timed exit. So when we looked at the time parameters, it had stop trading at 10:20, but if it's in a trade, exit by 10:25. And that's just so that if you happen to be in a trade that hasn't hit target, that you won't still be in that trade when the churn happens. So so it's got that little exit so that you will not be in the trade when the inventory report hits. All right, so this is our crude oil time filter. So what I've got is I've got 3 scenarios. This bottom scenario, I can run that any day but crude oil inventory day. And then on crude oil inventory day, I want to run this. So I set these 2 to true and this guy to false. So true means yes, start trading again at 10:31, stop trading at 10:20. If you're in a trade, get out at 10:25. And then if it's a non-report day, and remember, your inventory report can be at 11 on a Thursday, it can be at 11 on a Wednesday. They can do some odd things just depending, but generally it's always going to be 10:30 Wednesday. But they will combine it with natural gas, and they run natural gas at 10:30 and crude at 11. And that's usually on Thursdays. If they do that, if they push it back, and that's like if Monday's a holiday or something along those lines. So anyway, it's the #1 thing that you want to pay attention to if you trade crude at all. If you don't, if crude's not your market, then that report means very little to you. And if crude is your market, then all the other reports mean very little to you. There's not much that gets crude going, like jobs numbers or housing market reports. That's not really going to affect crude, but crude certainly inventory report makes it flip out. And if you trade another commodity like gold, there's no gold inventory report. So crude is kind of standalone. All right. Yes, Randy, we're going to talk about that. Randy wants to know, are there times that we should trade and should not trade? So that's going to be coming up. All right, so counter trend versus with trend only. Both are built into this system. And counter trend, the reason why we have 2 versions of Targeter is it will use 2 different versions of Targeter. You can set up your counter trend. Generally, I recommend the counter trend is slower than the with trend. So with trend, we kind of want to be into the trade. Counter trend, we want to be give it some time to confirm that it really wants to make a counter trend move. So this is just with trend only. Yeah, there's a few stops in here. There's a bunch of winners, and it puts up, in this case, 32 ticks. So that's great. This is every trade, I guess, that it took that day, because it looks like it was flat. And so that's fine. Now, if we're looking for counter trend stuff, that means that we have to have enough room to hit target. So like this is a long move to hit target, and if we're right on top of the channel, then counter trend is not the way to go. And so if you're like, well, I don't want to measure everything, then just sticking with trend which is, you know, if you go to our YouTube channel, that's all with trend primarily. I think the first video I covered counter trend, but other than that, everything's basically just with trend. So let's have a look at what it looks like with counter trend. Okay, so this is counter trend, and that means that we're going to be seeing red striping when it's looking for a shorty north of our center channel. Now this puts up 50 ticks, so it makes it seem like, wow, you know, counter trend is wonderful. It can be counter trend if there's enough room to hit your entry. I mean, it's a great trade. It was initially designed to, yes, take counter trend as well, but as you come into that center channel area, you know, this one barely hit target. This one, the buyer stepped in. So what happens is, in your center channel, buyers sit here, right? That's why we have higher highs and higher lows, because buyers are sitting in here and they can get triggered early. So in this case, they got triggered early, but there wasn't a fresh high, because this closer to the channel is where the bulk of the buyers are. These are the excited buyers, and they didn't have a whole lot of follow through on them. This much more sustained move. That was a nice move. So as far as triggering them, if they step in early, it's often going to be, there's not going to be a lot of follow through, and then they're going to get a little deeper and really trigger those buyers that are sitting in your channel. And so as long as you can hit target before they become involved and push things away, then great. Otherwise, just leave it off. Stick with the trend. Realize not every trade's going to work out, that they're going to, you know, sometimes hitch in their movement, knock you out, and that kind of, but you're trading in the right direction, and that's important. So even though this put up many more ticks, it's not always the best thing to do. And I actually started up mine today with counter trends on and took a counter trend winner, and then I turned them off because I don't typically run counter trend, but we'll have a look at that in a minute. So how we disable counter trend trades. Here we have some of our entry criteria, and if I have this set to 0, it will not take a counter trend trade. And then as a backup, we've got buttons on screen that we'll look at in a minute here. And I can turn my button to false, and then our buttons have color and are grayed out when they're disabled. And if this is set to false, it'll be grayed out, and I can click it all day long and it won't color because it won't enable. So we'll have a look at that. Oh, so here's our buttons. So this is with everything on, right? So if I was to click my counter trend, that's going to disable it. And so if my strategy is on and I'm like, wow, this is a news event and I forgot about it, like say it's crude oil inventories or something like that, I can turn off my strategy or pause it with just the click of the button. I don't need to disable it. Let me see. I've got a combination, Philippe. So when I look at all my past stuff, I want to put that up. We've got backtest and real-time results mixed in here because sometimes I want to show an event that happened in the past, and when you have it in real time, if you turn off NinjaTrader, that all disappears, so you have to pull it up in backtest. And then Sal, I will have other markets available, but for right now, I'm just running Bigfoot on crude oil inventories, and then we'll have a lot of testing going on with these other markets. Those are two YM and NASDAQ that I'd definitely like to have autos for, gold as well, and currencies as well. So longs and shorts, we can turn them off with a click of a button. So if you want to, if you're in a strong trend to the long side and you want to turn your shorts off, you can do that, or you can just simply turn counter trend off. It'll do the same thing. Or say you're approaching an area and you're like, wow, I know that this is a bounce area and I think it's going to take a short here and I think the market's going to move up off of this. You can actually turn your shorts off and with a click of a button, and not suffer a stop that you could otherwise avoid. As far as buying and selling buttons, that can get you right into a trade, and then your close button can close you out of an entry. So say you see things starting to turn against you and you're in profit, you can just close your trade and it'll get you right out. And let me see, Javier's asking, are discretionary entries possible with Bigfoot? Yes, by using your buy and sell buttons. And yes, Ryan, the EminiSniper indicators do come with Bigfoot along with the trend bars. All right, so this is today's action. So this is our 2 ticks. That means that we're looking for 10 ticks a move. So you can see the first entry short right out of the hopper here was a nice winner. And then this is, I had counter trend on, and I saw it come up, and you can see it had just enough. We know sellers are going to be waiting here, right? We had a big push away, so sellers are going to wait here. And so as far as the push away, yeah, that's going to typically be a good short, but this long here, it was able to hit target. And once that hit target, I clicked my button off. And then this short happened, and then we had all this movement here. And none of this fits our criteria for Bigfoot on a 2 tick. But when we had this push to the downside, it was able to capture this long. And that's why we had the green stripe here. And luckily it didn't get in over here where it could have knocked you out. It got in here and it was nice and clean. And then, yeah, I think we've got the rest of the day, so we'll have a look at that. So it hit 4 winners in a row, so obviously it would have done its job on the day. And then this is the rest of the movement. So that was the last long that we saw. And then it got into this, where it did hitch a little bit. Obviously, if you could leave your stop here at the swing low, it would have hit target no problem. And then we had another winner. So this one, we were in the 40 tick range. It took the 10 tick stop, and then it got back into the 40 tick range with the next long. So that's not bad at all. That means 2 days in a row the 2 tick was able to put up the 40 ticks, which is more than you should expect. Definitely. So the 1 tick had the same 2 shorties. So remember, on the 2 tick, it took those 2 shorts, and it also took this long with the counter trend trade. So this one was already set up with just with trend. And then these 2 stops here, unfortunately, knocked it down flat. And those were 2 trades that the 2 tick didn't catch. So in this case, you had to just be happy with the 2 winners, because that was as high as it was going to go today, unfortunately. And then this is so this is the 1 tick, and we saw where it was knocked down flat with those 2 stops, and then it was able to catch another winner, and so it was able to put up $100. But remember, it started, or well, yeah, $100, and but it had started out with the 2 winners prior to that. So, you know, again, was not able to get up any higher, and that's why taking 2 winners is usually, you know, I think it's done its job if it does that. All right, so our development continues. We will be introducing new markets and currencies. So there's a lot of good opportunity on all of the markets. I'm not going to probably introduce anything on ES, even though I think people, well, there's clearly a lot of people that trade ES, but it just doesn't move enough. And it's, you know, heavily manipulated. It's hard to get filled. So for those reasons, I'm probably not going to introduce anything on that market unless, you know, I come up with something that really puts up some good ticks. But in general, all the other markets move well, and so I will continue development on those. And then as far as our current strategies, people have asked for multi-contracts. So when you subscribe, it's locked in for 1 contract. Now, I've got 2 different programmers, and one of them created the strategy, but one of them does the lockdown bit. So when you subscribe, you install a Bigfoot installer, and I issue you a license key and all this kind of thing. And it makes it very hard to crack. And it's not that I don't trust everybody here, but I know that there's a lot of people that just want to crack developed code that, you know, somebody else has spent thousands of dollars and hours on. So anyway, so it's going to take two different programmers to make that change, and there's some other things I want to get in it too. So it's a little bit tricky. We will be adding more strategy approaches within the Bigfoot framework. So there's divergence built into it already, but there's a different type of divergence that I want to add into it that really puts up some really good ticks. And I just run it with like an 8 and 4 target, and it does very nicely. So I think that especially when you get into those situations where there's, a couple of hours between Bigfoot trades, because Bigfoot does not trade a whole lot during the day. We're seeing like, between 4 and 6 trades a day or something like that. And so this other one can make some ticks when things aren't moving or you just want to run it for a short period of time. And then those that are current and past Bigfoot subscribers will be able to receive a free trial on the new strategy. So just if you want to get a week-long trial or something like that to see something new that I've added, you don't have to subscribe for the whole month, just to get a feel for what the new things that we're going to be putting in there. So let me see. Can you move a stop? Yeah, Dave, you can adjust all of your stuff with trails. You can adjust it with break even, all of that kind of stuff. Billy, I agree. Billy doesn't like ES. Bigfoot's record on a long-term basis. Well, for CL, well, if you go through our YouTube channel, I mean, basically from the start of everything, we've been recording that daily. Today's is up already, so you can see what it's been doing. And if you're happy with net 2 winners, that's usually what we look for on the YouTube channel, and it generally can do that. Some days it can only net out 1 winner before you get chopped, but generally it's able to do that. And of course, the last couple of days have been extremely nice, depending on if you run a 1 tick or a 2 tick. So Bigfoot was all started with a 2 tick, and then we got into the summer months. And the 2 tick struggled for a bit, just didn't put up nearly as many ticks as the 1 tick. And now we're kind of flipping again, where the 2 tick is really putting up some big numbers and not so much with the 1. Oh yeah, Billy. The reason there's different targets within it is within the strategy framework that's already existing. And so I did limit it to the 1 contract to send it out, because what I didn't want is for some hedge fund to run all his clients on it, and then he pays me $2.99 or a month. So that's not fair. So we want to limit the contracts to a degree, but most people want to run like a 1-2 setup where they take one off at a certain amount, and then another one let it be a runner, that kind of thing. So that's all built into it, but I do have to get the 1 contract limitation out of it. And Michael, I don't have free trials with it unless you are a return subscriber, just because I've got to like mail out a lot of stuff, license keys, get you set up with templates, with new candle. So it's a lot of work. And if 70 people decided that, yeah, I'll do a free trial, I would literally be working my tail off to get everybody set up. So but if you're a return customer, you would already be set up with all that kind of stuff. So it's a lot easier for me to extend a free trial for you that way, if you understand. Yeah, Dave, I think you probably came late. So let me see when we were talking about this chart. Okay, when should I avoid trading? Market opens, news events, and consolidated markets are all situations you should avoid considering. So I've got my mine set up to start at 9:05 because it's right after the pit open. So what I want to do is avoid that initial pit open time frame, just because it can be choppy, and sometimes there's a winner, at 8:55 Eastern Standard Time, and it's an aw shucks kind of thing. But generally, avoiding that little bit of chop right around the pit open can be a good thing. News events. So that means that Not generally your 8:30 and your 10 o'clock news. 8:30 obviously I'd miss if I'm starting at 9:05, but crude oil inventory definitely is a big thing to avoid, and so we've got our rules for that. And then consolidated markets. So when we get consolidated markets, it can be something like an FOMC day, or CL is really bad about contract split. So there's usually about 3 days where you have, it's not a 50-50 split, but it's big enough to make it really tighten up in its movement. And so to just get through a contract split, like we had a day that was crude oil inventories, split contract, and FOMC all on the same day. And you know, that's just a really rough combination to try to trade through. So anyway, I don't know what it put up. I'd have to go back and look, but yeah, it is very it can be very tricky just because you don't have that movement. And so in order to hit 8-10 ticks, you have to have movement. And so if you have a market like ES, where, you know, if you can get 2 points on ES, which would be 8 ticks, it really takes quite a bit of movement to get that. And so that's why the people that trade ES, you know, a lot of them have 4, 6, or 8 tick totals that they're looking for in a day, where on crude you can look for that per trade. So it's just, you know, it's just a different animal. And so anyway, as far as things that you do want to avoid, it's those time frames. Yeah, as far as what parameters can be changed, all of them. You can change them all, but there's quite a few in there that I don't mess with at all. The things that you're going to want to watch for are going to be your start times, avoiding crude oil inventories. Those are big. Your targets and all of that. A lot of people use the trail, the break even, and there's something called a hook exit, which let me see if I can show you an instance of a hook exit. Okay, say on this mover here, this hook right here would get you out of the trade, or you can exit on the cross. So you can get some big runners, but that doesn't mean that everything's going to run for you. And as we were discussing before, in order to get 8 ticks, you're going to have to probably get an 18 tick runner to just be happy with the 8 ticks. So a lot of times you're going to be a lot happier just taking a more reasonable target than looking for a runner every time. Yes, this is my template, and it's just called Bigfoot Gray or something like that. I don't really know what I call it, but yeah. So the reason I usually trade black charts because it's a lot of glare, and so I like to look at black charts. But this striping in the background, I can't see it on a black chart, so I made it gray. But I don't like a white chart; it makes me snowblind. So so I just kind of had this grayed out. But yeah, and then on this gray, either having your axis as white or cyan is usually pretty good, shows up all right. So yeah, I definitely get the templates out to everybody. And initially I wasn't allowing people to have the indicators, they would show up invisible. And then I just thought that that was cruel and unusual punishment. So I included the indicators with it, but that was going to be an extra cost, because if you're an EminiSniper customer, you pay for the indicators. And then if you're a Bigfoot customer, you don't pay for them, but you're paying a cost anyway for running it. And, you know, if this thing was putting up, you know, 60, 100 ticks a day, then I would go ahead and charge for them. But I know some days can be a struggle, and some days are going to be flat days and all of that kind of thing. So just to make things easier, I think it's a lot better if you can visually see what it's doing, why it's doing it, and then adjusting accordingly. So, all right, well, I'm going to hand it back over to Jared. I think I went over my time a little bit, but I really appreciate it. Thank you for everybody that came out. I hope to hear from you. And, you know, if you're thinking about subscribing and you're not really sure, things will become even more dynamic as we get out of the summertime months, and I will have other things introduced. So I know I've got a little price special going on right now. But if you want to wait, I'm not putting any pressure on anybody. This is actually a really new product, and I've got more things to release, but I think it's great to have an opportunity to let everybody know that it's available. And the special, I'm sorry, I guess I didn't even get to my last chart. I don't want to. All right, many thanks to NinjaTrader. Our room is open from 8:15 to 11:30, so feel free to drop by. I've got all those black charts on screen where we follow all the markets, but I drag over the auto and let people know what it's doing. And you know, what I want to see is every trade a winner, because I know that people are trading it, and when something's a stop and they're using my settings, you know, I don't feel good about that, and I don't like to see red days. I like to see green days. So as far as what we're running, I just pull it over and say, hey, you know, it caught this, or it got into some chop, or whatever the case is. So we will have somebody from NinjaTrader tomorrow in the room, and then they can answer your brokerage questions. NinjaTrader is a great brokerage, low margins, low commissions. And then we've got a $100 discount on the Bigfoot strategy, so that's per month. That's already on the Bigfoot Automated Trading site. And then if you want to purchase the EminiSniper lifetime membership, that's $150 off right now too for the attendees. And I know most of my customers have converted over to the lifetime license, just because it's a really good deal. So, and if you have any questions, you can just shoot me an email, info@Bigfoot Automated Trading, or info@EminiSniper, or you can catch me on Skype. And my Skype name is EminiSniper1. And yeah, link to the room. So Sal, just go to the EminiSniper site, and you'll see the trade room link on that. The difference between the two, Michael, on the emails, there's nothing, no difference. But the difference between the sites is one site is for following along with the markets, and we discuss where they are and where they're going, all that kind of fun stuff. And then Bigfoot is just a strategy that gets run, and I drag that over, and I just show people how it's doing on the day. Okay, all right, well, thanks, and I guess Jared's around. I'll hand the reins over to him. Skype username, EminiSniper1. So I don't know if this will come up for everybody, but...
Excellent. Well, you know, we're glad to have you in the room, and just wanted to give a special thank you to Rob of Bigfoot Automated Trading for his great presentation today. And want to let everyone know also that NinjaTrader is pleased to sponsor these weekly partner events as a value-added service for our clients. If you find value in these events, that we hope that you will attend them on a regular basis. I'll put a link into the room here for those of you that are interested in attending other events in just a moment. And just let everyone know, I will be the one in the room tomorrow with a presentation, in Rob's room tomorrow with a presentation about NinjaTrader and some other fun items there. All right, and again, we appreciate everyone's time they spent with us today. Please enjoy the rest of your day, and we hope to see you again in future webinars. Happy trading from all of us here at NinjaTrader.